Welcome back to Ben's Book Club. Today, we are diving into the book Simple Path to Wealth by J.L. Collins. Now, this book's core message is a total game changer because it argues that building some serious wealth isn't about complicated strategies or secret stock tips. Nope, it's actually unbelievably simple. So let's dive in and see how.
Right off the bat, Collins completely reframes the goal. This isn't about luxury cars or showing off. The real prize, the actual point of all this, is freedom. And he has a pretty memorable name for the first stage of that freedom: FU money.
And this is the idea that just grabs you, right? Few money isn't about never working again. It's about having the power to choose. It's having that cushion so you can walk away from a terrible boss or a job that's draining your soul. That psychological freedom, that's the first huge win on this simple path.
Okay, so if it's all so simple, why does it feel like rocket science to most of us? Well, Collins argues that we've all been sold a big myth. And it's a myth that, surprise, surprise, mostly benefits the folks selling us really complex financial products. I mean, this quote is a direct shot at the entire financial industry. The book basically says that all that complexity is just a marketing tool. It's designed to make you feel like you need an expensive guide, when really, that complexity just means higher fees that are silently eating away at your money. So here you can see the two philosophies side by side. On one hand, you've got Wall Street's way, this stressful, endless game of trying to pick the next hot stock, trying to guess when the market will go up or down, all while paying crazy high fees. And on the other side, a calm, simple approach that, for most people, actually works better over time. Okay, so if we're throwing out that whole complicated mess, what are we left with? Well, the book's answer is the heart of its entire philosophy, and it's this beautifully elegant three-step formula. That's it. Seriously, that is the whole plan. I know, it sounds almost too simple, but all the power is in actually doing it. The bigger the gap between what you earn and what you spend, that's your savings rate. The faster you buy your freedom. Everything else is just noise. And when it comes to step 2, Collins does not pull any punches. He sees high interest debt, like credit cards and car loans, as the biggest single roadblock to building wealth. Paying that stuff off as fast as you can isn't just a suggestion, it's essential. Every dollar you pay in interest is a dollar that can't be out there working for you. So, what about step 3? What do you actually do with that extra cash? The book's answer is, again, shockingly simple. You invest it in one thing: VTSAX. That's the ticker symbol for Vanguard's Total Stock Market Index Fund, and it is the core of this entire investment strategy. So why this one fund? What's the magic here? Well, it's the ultimate simple but powerful tool. You're not trying to find one single needle in a giant haystack. You're just buying the whole haystack. Boom. You own a tiny piece of thousands of American companies, so you capture the growth of the entire economy for an incredibly low cost. And that cost part is so important. Look, a 1% fee doesn't sound like much, does it? But over decades, as your money grows, that small fee can devour almost half of your potential wealth. Think about that. That's the hidden price tag on complexity. All right, so you're on the simple path, you're investing, but then what happens when the sky is falling and every news channel is screaming market crash? This is the big one, right? The ultimate emotional test. And Colin spends a lot of time in the book helping you dismantle the fear around it. And here's where the book really flips the script. This might be the most counterintuitive and maybe the most powerful lesson of all. While everyone else is panicking and selling, Collins teaches you to see a market crash not as a disaster, but as a massive sale, a gift. The logic is actually super simple. Think of it like your favorite store having a 50% off sale. When you're in the phase of building your wealth, a crash just means every dollar you invest is buying way more shares of the market than it did last month. You're getting the exact same assets, just at a huge discount. This literally accelerates your long-term growth. And the only reason you can be this calm, this competent, is because of one simple historical truth. Look, through everything, wars, recessions, pandemics, you name it, the stock market has always, eventually, recovered and climbed to new highs. Your only job is to stay calm and keep investing. Okay, so we've got the strategy and we've got the mindset. But how do you know when you're actually done? How do you know when you've won the game? Let's get down to it and calculate the finish line, your financial independence number. And it all starts with this one number,
4%. This is the famous 4% rule. It's basically a well-researched guideline that says you can safely pull out 4% of your portfolio every year in retirement, and there's a very, very high chance it will last for the rest of your life. So if that's your safe withdrawal rate, how much do you actually need to have saved up? Well, the math is, again, just beautiful in its simplicity. You just take your total annual expenses, whatever you spend in a year, and you multiply it by 25. That's it. That's your target.
Let's put some real numbers to this so you can see how it works. Let's say you live on $40,000 a year. Your target number is $1 million. Need $60,000 to live on? You're shooting for $1.5 million. What's so powerful about this is that it shows you have two big levers you can pull. You can invest more, obviously, but you can also lower your expenses, which directly lowers that final target number.
So let's just pull this all together. This really is the entire path laid out for you. It starts with a huge mindset shift. Wealth isn't about stuff, it's about freedom. You reject all the complexity and just embrace a simple 3-step formula. And you power it all with a long-term, unshakable belief in the market, even seeing those scary downturns as your friend, while you march toward that 25x number.
You know, the book gives you the roadmap, the how-to, but it leaves you with the biggest question of all, the why. This whole strategy isn't about hoarding a pile of money. It's about buying back your time, your most valuable asset, the one thing you can never, ever get more of. So the real question it leaves you with is, what kind of life would you build if money was no longer an issue?
Subscribe so you don't miss an episode.